functioning. Ladies and gentlemen, I'd like to start off by thanking the organizers for inviting me today. It's my second participation at the AlBaraka Summit. I previously was in Bahrain in 2017, and it's an extremely elegant affair, and what a privilege to give a talk to this audience. I wish all my lectures were this elegant. I'd have quite a different view of academics. Before I begin, I'd like to reflect very briefly on the situation in Palestine, because I think that's on all our minds. I'd like to quite clearly call for an immediate ceasefire and a permission to allow aid into Gaza to alleviate the great suffering that's taking place. I think that we all want to send our prayers and our hopes and our best wishes to the many victims of this violence, and we must recognize that violence is never the way forward. Now, we're talking about the legal aspects of Islamic finance in the United Kingdom, and this is a topic that I've worked a great deal on. Transnational Sharia must be facilitated, regulated, and adjudicated in the global economy. Does this mean, however, that we should establish a pluralistic regulatory order with diverging logics and a lack of uniformity? Well, in fact, a public response to a government consultation in 2008, and this is subsequent to the development of Islamic finance legislation in the UK Finance Act 2004, regarding the issuance of sukuk, fielded a number of interesting responses. Respondents felt that, quote, it was inappropriate for the government to issue sukuk or to take any action which could result in the incorporation of Sharia into English law. Mind you, this is in a political atmosphere when the Sharia was quite a controversial topic in English law. Further, disclaimers should be required so as to shield the government from claims that it's engaged in marketing non-Sharia compliant products. I might actually agree with that, and I'm certain that I have in some of my writings. The government's facilitation, moreover, of Islamic financial structures within English law forced it to adopt valid interpretations of Sharia-compatible structures. Again, I actually agree with that position. But in general, we must say in English law and in the UK legal system, the facilitation of Islamic finance has been seen as a relatively benign subject, unlike family law and inheritance law issues around Sharia councils, which have a representation amongst Muslim diaspora in the country. And so a lot of these amendments were essentially facilitated in a political time that otherwise may have prevented that facilitation of this industry. But it is for that reason, in fact, that these amendments were known as alternative finance arrangements. A neutral concept, not Islamic financial arrangements, but a concept devoid of religion, devoid of a prioritization of a particular financial market or population vis-a-vis the majority population, or vis-a-vis the diverse composition of the UK society. The government sought to include all financial institutions operating in the UK or seeking to do so under the same standards. And that would be true whether or not, regardless of their country of origin, the sectors in which they sought to specialize, or their religious principles. Legislation was not to be tied to the Quran or the Islamic faith, but rather the intrinsic features of underlying contracts under UK law to which the rules applied. This was a religiously neutral position, premised on establishing a so-called level playing field. But what is a level playing field? And can we really establish a level playing field for Islamic finance in the neoliberal global economy. Now, these are some of the academic questions that I have worked on, but in practice, successive legislative amendments have centered on, in fact, removing tax disadvantages or disincentives, and that has been particularly the case with respect to legislative facilitation, where the form of the law has been the focal point. However, in relation to regulation, the substance of transactions has drawn the interests of regulators' focus, and specifically difficult issues related to regulatory classification, as well as those relating to the two-tier mudaraba, the theoretical mode of Islamic financial intermediation, which has quite a unique solution in the United Kingdom. In terms of adjudication, several important cases developed, one which is a precedent, namely Beximco amongst Symphony Gems and the investment DAR. In Shamil Bank v. Beximco, the the English court decided that English law would not allow the Sharia to play the role of governing law of a contract, contrary to the Rome Convention and the subsequent Rome regulation. So where do we go from here, ladies and gentlemen? What next steps do we take to level the playing field? These are the questions I direct now to my eminent speakers, who I'd now like to introduce. And first, I'd like to introduce Professor Mohammed Abdel Haq, who's the founder of the Center of Opposition Studies and a professor of banking and the director, indeed, of the Center of Islamic Finance at the University of Bolton. As well as his academic knowledge, Mohammed has a wealth of practical experience. He's worked for Citibank, Deutsche Bank, HSBC. He's also the founding member of Oakstone Merchant Bank. In March 2003, he was one of the original members of the Islamic Finance Task Force, which is a non-ministerial group of industry experts in the country. Thank you very much, Mohammed, for being here. I'm going to introduce Dr. Amir Jamzic. I hope I've got that right. I've had to work on that. Please forgive me. It's the j that gets me. Before I allow the speakers to begin. Dr. Amir joined the Center for Islamic Finance in 2018, and he is currently working as a lecturer in Islamic banking and finance at the University of Bolton. He holds a PhD from the University of Bolton and a master's degree in Islamic banking, finance, and management from the University of Gloucestershire. And Amir's intellectual interests center on intangible assets, as well in the Islamic financial institutions, and exploring ways in which they can be effectively managed and measured. Amir is supervising a number of research students from various disciplines in business studies, and also acts as a research coordinator for the Center of Islamic Finance. Please join me in welcoming these very eminent scholars.
I stay here?
Professor Mohammed, please, yes, make yourself comfortable.
Thank you.
We have 10 minutes. Please try to stick to that.
No, I promise, and I'm aware of the pressure on time. Thank you very much for having me, and I'm grateful to AlBaraka Group and Sheikh Yusuf for his kind invitation, and to Brother Ibrahim for his support. Dr. Jonathan has probably explained a substantial part of my thesis for today, which is great. So I will try to emphasize on a different elements here. The first one is the government and regulators in UK very keen to boost the UK competitiveness. That's a fact here. And to achieve this, they won't like to work together on the long-term vision, not short-term tactics, which is the regulators here, they believe that they are the standard bearer for innovation and regulation around the world. Also, the regulators in UK, the banking regulators, in particular probably the FCA, it's a view on risk is let us not be so afraid of failure that we stifle innovation. So this is now a new way of thinking, which is a bit probably different what you expect from a general regulator. As a result, the regulators here in UK, they are now currently transforming operations. They would like to, firms want speed, clarity, and certainty, particularly on authorizations. They would like to leading on international collaborations. Effective regulator has to be internationally engaged, and that is, by the way, indirectly will have an impact on Islamic finance, because if you want to work with international regulators, other regulators like Saudis, like UAEs, Islamic banking features. And that means they will, it is welcome development. As I mentioned earlier, definitely there is an emphasis on a greater risk appetite. They would like to see banking institutions have a bolder risk appetite. Doesn't mean you need to be reckless, by the way. That's to be defined and qualified. And of course, investing in digital and data infrastructure. Briefly, you know, to sum it up, the regulators in UK interested in competitiveness, financial inclusion, and customer rights. That is the three words. If I may share with you, I thought it's a very, very relevant to quote the CEO of the FCA. He gave a speech recently, and I just would like, with your permission, Chair, to share it with our friends and brothers and sisters here. Sorry, I'm just trying to... forgive me, it's, you know, Murphy's Law. When anything could go wrong, will go wrong now. And I found it. The CEO of the FCA gave a speech recently on financial inclusion. And the highlight of it, which I thought is very interesting, basically the FCA cares about financial inclusion and is seeking solutions to spread it. But it doesn't have all the levers at its disposal to have justified making it as a statutory requirement. And this is coming to your point, you know, where is the law, can we have a dual system or not? They don't have the power to do further. The second point here I just would like to make out of his long speech is solutions. This is very interesting. The regulators give the platform, but the solutions come from industry and especially through technology. This is the belief of the regulators in UK, where clearer and more targeted products can be rolled out at the scale. The regulators are stand ready to regulate new products. So if I may move to another point, why we care, why the regulators in UK care about financial inclusion. The government definition of financial inclusion is that individuals, regardless of their background or income, have access to useful and affordable financial products and services. Campaigners argue that firms have resisted providing access to products and services to the less profitable customers. Over time, with more personalized profiling and pricing, some groups may be left behind as the computer says no to their non-standard fit. And Islamic banking client, probably they will come under that. The unbanked, the ultimate excluded is the unbanked. The ultimate example of financial exclusion is not having a bank account. To put it simply, the most unassuming but most essential financial services is to have a bank. If you don't have a bank, you are definitely excluded. There is in the UK 1.1 million adults, i.e. 2.1% in the UK, they are unbanked, of which, out of those, 10% of the Muslims have no, in UK, 10%, and this is an official figure, by the way, 10% of Muslims have no account, and 7% of those without work. So that you can see now the correlation between unemployability and bank account. In UK, if you don't have a bank account, you can never have a mortgage. If you can't have a mortgage, you will never can have a house. If you don't have an address, you don't have a bank account. It's a very brutal cycle here. I need to, okay, so briefly, but Jonathan, you are very kind. You discussed most of my paper, but okay, let me go briefly. But Jonathan was very kind to explain, but I will go within 1 minute here. How can I move this? Yeah, okay. So the legal framework of financial services in the UK, you have regulatory changes allowing Islamic financial products. For example, now the regulators allowed murabaha for property finance. Islamic banks authorized, as the chair said, authorized, not an Islamic bank, authorized as a financial institution, but after that it's up to the management to decide if they want to follow Islamic banking principles or not, rather than an Islamic bank. So that, for example, to make things more clearer or simpler, if you declare yourself as an Islamic bank in Britain, the regulators, if you don't have a Sharia committee, the regulators will not come and say, where's your Sharia committee? That's up to you to decide. And up to the customers to decide whether you are an authentic Islamic bank or not. Of course, we are aware of the Sukuk legislation, tax and regulatory framework. There is definitely a contribution here because, in Murabaha, the stamp duty, in Murabaha real estate finance, there is buy and sell. The regulator or the taxman here decided to consider this as a one transaction, i.e. one tax duty rather than two. The second point, Islamic finance refers to financial activities that adhere to the principle of Islamic law. In the UK, the Islamic Finance Task Force there was a task force initiated by the Treasury to discuss the challenges, opportunities of Islamic finance, Islamic banking in the UK. And of course, it has been culminated by having a sukuk, and that was the first one. Again, supporting Islamic finance, we mentioned those earlier, including the financial inclusion. Islamic Finance Task Force, this is basically the journey of it. And growth of Islamic finance, again, this is, the previous one, which is takaful, there is a big mismatch in UK between when it comes to Islamic banks or Islamic banking and Islamic insurance. There is no, it's not working in parallel with each other, despite that the regulation is accommodating that. We talked about this.
Can we, in fact, shift some of these questions, in fact, to the discussion?
Okay.
I think that would be great, and then we.
And that's it. I'm done. Thank you very much. Thank you.
Dr. Amir.
Right. I'll take the lectern. Sure. distinguished guests, colleagues, respected professors, Assalamu alaikum, everyone. I would like to begin by thanking Albaraka Group for organizing such an important summit here in London. I'm especially grateful to Brother Yusuf Khalawi, Secretary General of Albaraka Summit, for his leadership and vision. I promise I will keep the time. So today, just a brief outline on the official engagement in the Islamic economy sectors, the adoption of new developments in the Islamic finance services. Here, just a quick overview of legality of Islamic finance solutions. Endorsement from English law. One of the key principles of English law is that the freedom of contract is paramount. So it means that all parties are free to enter into any type of contract they wish, provided that is not illegal or contrary to public policy. Jonathan, correct me if I'm wrong. Also to mention the FCA, one of the primary regulatory body for financial services industry in the UK. It has issued a number of guidance notes and rules that are relevant to Islamic finance. Then we've got the government's involvement in governing and regulating Islamic finance in the UK. And it is important for a number of reasons, as we know. It helps to ensure that Islamic finance sector runs in a fair and transparent manner. It helps to protect consumers from fraud and other forms of abuse, and also to promote growth of Islamic finance. In terms of the UK experience, reflection on Islamic finance, in 2014, seeking to strengthen the UK's position as a centre for Islamic finance, UK government issues £200 million Sukuk bond, which was followed in 2021 with 500 million won. Now, I've put here Islamic finance solutions. Charity, trusts, zakah, awqaf. I'm sure we are all familiar with these. Let's just assume if we combine these with increased awareness and understanding of Islamic finance, greater product and service innovation. So we've got hubs being created. I just recently read Deloitte had Islamic Finance Knowledge Center. Improved access to Islamic finance, bankable and unbankable, which as Professor mentioned. Supportive government policies, then we can expect growth and real value added to the society that we live in. In terms of the fintech in Islamic finance industry, we've got some great examples from the GCC region and Malaysia. Sidra Bank, for example, world's first Islamic decentralized finance. Shuraka from Malaysia, digital marketplace for Rahan. Zid from Egypt, another digital wealth management platform. But in the UK, we have rather limited range. One perhaps that stands out is, and we came across, is Wahid Finance, Wahid Investment actually, and they raised recently over $50 million. So the question we really need to answer is, why do we have such a limited choice? Fintech is being very much researched. We also have practitioners who are interested in implementing and realizing the ideas. Also to launch the public awareness campaigns. If I go back, partnerships between Islamic banks and fintech firms. This is very, very much needed. Companies, fintech companies and Islamic banks, when they come together, it's a win-win situation for both. So banks could certainly gain access to new technologies, improve customer experience. They can also reduce costs and gain competitive advantage. On the other hand, we've got opportunities for fintech companies to benefit from the resources and also from the expertise of the banking sector, and also they can reach wider range of customers. UK Muslim charity sector, £700 million with an estimated growth of 4.4 billion. We know that Muslim charity sector plays important role in the UK in empowering Muslims and other disadvantaged communities. There have been a number of collaborations between Islamic banks and charities in the UK in investment projects. Not to promote any of the banks, but one that really stands out is between Al-Rayyan Bank and Islamic Relief in 2017. By looking at the size and the growth rate of the charity sector, there is a huge potential for investing in fintech. Zakah, hundreds of millions collected in the UK annually. This is what Brother Yusuf Khalawi mentioned in his speech at the beginning. So, Zakah in the UK is given out and collected through different means, we know that, and we know that the large proportion of Zakat funds is also sent abroad. But some of the interesting facts that we came across is the poverty rate in the UK, which is at our doorstep. So in 2021, according to statistics, 13.4 million people in the UK were in poverty. 21-22, that percentage decreased, but yes, there was COVID. There was, of course, some of those factors influenced that. But certainly, there is a huge opportunity for Muslim charity sector and also a duty for Islamic banks and finance industry in general to add real value to the society. Promotion of social responsibility, ethical investment, financing, SMEs, and some of the vehicles, you can call them, zakat-based investment funds, sukuk, microfinance, zakat-backed takaful. Regulatory bodies, just very briefly, FCA I mentioned and its role in regulating Islamic finance, setting rules and guidance, supervising Islamic financial institutions, enforcing the rules. Then in terms of the regulations, we have the key regulation Finance Act in 2005. But the most significant point is removal of double tax, double stamp duty, which we mentioned. Then in 2007, we have an update, Finance Act 2007, which covered sukuk with the intention of paving the way for the inaugural sukuk issuance from the government. In terms of the challenges, there are many challenges. We need specialist knowledge in this area. Lack of harmonization of standards. We've been talking about this for quite a while now. But I'm very pleased and happy to see that last year in March I came across the document where AOIFI and IFSB came together with the exposure draft, which is to work together on harmonizing the standards. So the need for coordination between regulators. Need, of course, for public awareness. Recent developments establishment of UK Islamic Finance Task Force in 2015. Professor Abdul Haq, he was part of the team. I don't want to go into that. I've got 10 seconds. Excuse me. I'll need a minute. Then basically hosting World Finance Economic Forum in 2016. Just a brief timeline. In 2000, we have seen first fully Sharia compliant retail bank on the high street, and up until 2022, we've got Islamic finance assets projected 50 billion, but it is five times more, right? Looking ahead, Sukuk, prospects for Sukuk expansion in the UK are positive. Growing Muslim population, we had, according to statistics in 2011, 2.7 million Muslims were in the UK. 2021, 3.9 million. In the next 10 years, it is expected for number to exceed 6 billion Muslims in the UK. So surely there is a much more need now to cater for needs of Muslim population in the UK. A well-developed financial market, supportive regulatory environment, and I'm just going to really close my speech with this quote here. Islamic finance has the potential to revolutionize the global financial system. There has to be more financial inclusion. We need to find ways for making it more ethical, and so we can ensure sustainability of the sector. Thank you very much.
Thank you very much, Dr. Amir and Professor Mohammed. Those are both very insightful presentations. I'd like to follow that up by asking a very straightforward question. Has UK finance, Islamic finance, been successful? Is this a successful project? Has it reached the people that it sought to reach?
Again, it depends from where you start. I mean, remember, in the last 20 years ago, there was nothing, the first bank was established in UK according to Islamic principles. Interesting enough, it was founded by his late Sheikh Saleh, AlBaraka, and the experience was successful and not successful. Ended up, the bank has not carried on. The communities engaged, but not as expected. So I personally, where I said, I think internationally, Islamic banking became much more successful than locally, i.e. the international banks in London deal with substantial volumes of Islamic banking money through institutional relationships, institutional banking. Whether now in the UK market, it has not reached its potential. And partly it's the cost, partly the communities, the Muslim communities are in various cities. They are not focused or concentrated in one area. So it's very, very difficult to have an Islamic commercial bank. Each branch will cost £3-4 million a year to rent, and it's the cost at the end of the day is very high. Maybe the new technology now will make the Muslim community can reach each other, But overall, it is definitely, it's moving in the right direction. The regulators here is, in my view, not neutral. I think the regulators, again, remember, I have some practical job in the city as Oakstone. The regulators are positive, but within the law. You see what I mean? That we have a law, you need to follow, but whenever they understand the value of Islamic finance nationally and internationally.
If I could follow that up, and Dr. Mir, I'm interested in your view as well on this. What more needs to be done in the law to facilitate a level playing field for Islamic finance?
Right, this is interesting. Interesting question. I'm not a lawyer myself, but we come across these. We need a level playing field. I personally believe that Islamic finance is operating currently within the framework which is already available, and how to develop that, how to move to a dual banking system. I mean, if we look at, for example, Malaysian experience, I mean, you have completely different level playing field, so-called, which really allows banks to come up with more innovative ideas and implement them directly in financial system. So, in the UK, I personally believe that, allow me to say, Islamic banks are as Islamic as they can be within the framework.
If I may?
Yes, of course.
I mean, again, we can debate as an academics about level playing fields, but I think here in this society is the demand need to be there. For example, the supply will create the demand. So, for example, if you are a Muslim investor, a small investor, if I have a £200, I want to open an account for one of my daughters, for example, I can go to Barclays and I will open an account. Okay, I don't think there's any Islamic bank in UK, and this is facts. It's not a criticism. I'm just factual things. You can't go and open an account for £500 in Islamic bank. They are only geared for either high net worth individuals or probably some of them ultra high net worth individuals. So you need to have 1 million. You need to have 500,000. For example, you can't go today to, I don't want to mention names because I'm not criticizing here, but if you are a small depositor investor, you cannot have an Islamic bank account in any Islamic bank in Britain.
Is this, this financial issue, which seems to be quite a factor in whether or not people access Islamic retail banking, would you say that this is the decisive issue? Because Islamic finance retail banking has been rather troubled.
I personally believe so. I don't think the regulator is not going to tell banks, you should accept this and this. This is up to every individual bank to decide. Again, the universal wisdom, supply create demands. So there's no supply. There's no supply. I'm not trying here to defend the regulators. The regulators, they don't need defending. But I don't think the issue is whether it is a level playing field.
Beyond the supply issues, is there a view of the industry amongst potential customers of Islamic banks that these instruments are indeed Sharia compliant, or in fact, is Sharia compliance something that UK Muslims feel strongly about?
I have to be very clear. I can't speak on behalf of the UK Muslims here. I can speak from my limited experience and some of my personal practices. Again, let's compare Islamic finance to halal meat. Some Muslims in UK, they don't buy halal meat. They don't believe in it. Whatever it is, that's fine. Now, there is other people, they only buy halal meat, and there is some people, they are, if all, as they say in Latin, ceteris paribus, all things equal, they will buy halal meat. So, for example, if you go to Waitrose, Sainsbury's, and you find halal meat and non-halal meat, you will go for halal meat. But if you are not willing to buy it from a small shop, so why let's draw an analogy here to Islamic. So if this person care about not only to eat halal meat, that means definitely he is aware of the power of prohibition of riba. The issue is there is no supply. There is no initiatives. Most of the initiatives addressing either international visitors, investors, or not the students, for example. Again, as I told you, I don't know about Dr. Amir, but I can't imagine if you have a £500 today and you want to open a bank account, you can. I mean, to be fair, sorry, forgive me, just one more point, and after that I will come back to you. I mean, for example, UK government has, we have student loans, yes? They discovered that some Muslim students, they are not interested to go to universities because the loan earn interest. So what did they do? They established a student loan according to Islamic principles.
My understanding is they haven't actually.
They haven't, but they are definitely
on the way.
On the way of it, because I'm involved in one of the committees or subcommittees and some few MPs. All what I'm trying to say is, now it is up to the Muslim student why the UK reacted, because the figures, the statistics. I mean, this is a great country with data, as you know, with the statistics. It's all about statistics here. They discovered that Muslim student, they don't go. They don't want to exclude them. So it is. I think it is now the stakeholders in the Muslim communities in UK. Now they need to engage more, and this is the importance of a conference like AlBaraka. Invite a lot of stakeholders here, which is great. And in order, I mean, you have 1,200 Muslim mosques, for example. Why they don't have Muslim accounts? Because there is no Muslim accounts for them.
Okay, well, those are interesting points. Dr. Amir, do you want to add something to that before we open it up to the audience?
Absolutely, yes. Raised awareness and inclusion. I mean, we've seen from conventional banks, we've seen that they are out there. They go to schools, promote finance. And in terms of the inclusion, financial inclusion, just want to point out, yes, well, Professor Abdul Haq said, so if you have just ordinary person, or let's say a student, if you are about to open student account, you want to go and support Islamic finance, and then you come to the branch and you need a deposit of 500, 1,000 pounds. I mean, that is certainly something which puts customers off, and we know the reason why, operational costs, but certainly Islamic banks need to look into this in order to attract more.
Okay, thank you. I'd like to now open it to the audience. Any questions, please? Yes, the distinguished gentleman here. Why don't you go first, if you wouldn't mind? Oh, do you need a microphone? Oh, I'm sorry. Professor Kabir Hossain, please.
Yeah. Thank you. It's a very interesting panel. Actually, you're talking about this halal and ecosystem. Unfortunately, the halal food and halal finance got disjointed at birth. Does the UK population know that their halal chicken is not really financed with halal money? Most of the cases by haram money. You're talking about the ecosystem, supply and demand. There are a lot of opportunities. Now, how to go about in the UK or in the entire world? Because we are so much fixated on halal food, but we never think that this halal food is not really financed with halal money. Most of the cases with interest-bearing money. Any thoughts on this issue?
Let's take one or two other questions, and then I'll allow you to answer, please. First, this gentleman in the center, please.
Wahid Kasser. Thank you very much, Dr. Abdul Haq and Dr. Amir, for your excellent presentation. Further to what Dr. Abdul Haq said about the the approval process with the regulator. I can add a bit more to that as the founder of Islamic Bank of Britain, that the regulator would look at all the elements that you put in the regulatory business plan. And the Sharia board is a very important element in that. However, they will not interfere in the Sharia matters as to how the Sharia is structured or how the committee is structured, but they would want to know that we have, the processes in place where the customer is treated fairly. To Dr. Amir, I would say, I think in one of the slides I saw the first Islamic bank in 2000, that was set up in 2004, and I think that was probably the most jubilant day of my life, when I was running from one radio station and one TV station to the other as a media spokesperson of the bank as well. And I think that was a great day for the Muslims. I would also like to add and appreciate the UK government and the regulator that they have facilitated lots of things for the promotion of Islamic finance and Islamic banking and takaful. Back in 2000, we set up the Bank of England Committee for Islamic mortgages in particular, and I'm the founding member of that. We fought for 3 years to slash the double stamp duty on Islamic mortgages, and finally, we had the constitutional amendment for Islamic finance in 2003, where the double stamp duty was slashed. And I think the work continues. I am also the applicant and the chairman and the CEO and the part owner of the bank in France. I applied for the license back in 2009, but I'm still waiting. So that's the difference. This is how UK has facilitated the Islamic finance share. To Dr. Abdul Haq, also your mention about the account within the Islamic banks. There are some banks that may not open the account for the retail customer, but I know very well for the Islamic Bank of Britain, because I'm the one who set up the strategy, there was no discrimination. We always welcomed, whether these were the ultra high net worth or the retail customers or even the SMEs. So just a correction there. Thank you.
Okay, I'm able to take just one more question. I first have to go to this gentleman here, please. You, sir, yes, please.
Thank you for giving me the opportunity to ask a question and a comment as well. Indeed, very interesting discussions that are taking place, and I'm pleased to have Dr. Abdul Haq, which we have worked over the years for many, many years. Some points are coming in. You mentioned the issue of the Islamic banks in the UK, and I agree 100% that the few that we have are making very clear that they basically are looking for profitable business. And there is no profitable business with the ordinary account holders in the UK. Many of us who were involved with Mr. Kesri and others going back into 1980s, late 80s and 90s with the former governor of the Bank of England, who assured us that he was quite keen to work on. The banks that actually came in, including the Islamic Bank of Britain, the very first bank, which we were part of it in establishing it. And then when they took it over, the whole objective has changed. Of course. They're looking for high net worth businesses, not only high net worth businesses in the UK, primarily from overseas. That's what they're after. And they don't mince their words, they are very clear about it. So my question is that if this is the sad reality, where I know thousands of people wanted to go into Islamic Sharia compliant banks to open their accounts, to feel their comfort, but how come that now to make them profitable? Because they will not come in if there's no profit, right? There's so much of discussion. We have got our key players here from different parts of the world. How can we incentivize them to come in? The government is very keen to work with the Islamic Sharia compliant banks, and we need to find a way on that. The second point you referred to is on the students' loan that is, of course, Islamic. And I remember going back about 10 to 15 years, Prince Charles, King Charles, formerly as Prince Charles, was one of the first person to come to us and say, how can we facilitate providing some finance to people who are very weak, who are coming out from prison, to support them, rehabilitate them, and we need to provide some sort of finance. We mentioned at that time that many of the Muslims would not be willing to take loans on that. And he said, let's find a way out. And at that time, the Muslim Council of Britain, with our key people in the department and the committee, we prepared a formula which he accepted and implemented as well. He did implement. Instead of charging interest, there was certain charge level of administration that took place, and it has been put into practice. So where there's a will, inshallah there's a way. There's no question about it. Okay. And we need to now be more optimistic. Things can work on. I only urge that our new generation of leadership that's here, foundation has been established by key people around on this table. They need to take it up now. We had the WIF conference, if you remember, 18 heads, the world leaders were present in Excel, where the Prime Minister introduced the first time the sukuk. Now, that was a major achievement, at least by the government of the UK. Absolutely. And this can take place. We have to be persistent, move through, and very well better organized. Thank you.
Okay, I'm being told that we have very little time left, so I'm going to ask you gentlemen to be succinct, and I apologize for not being able to field more questions. Perhaps you can have those privately afterwards.
If I may, please. Just briefly. Professor Kabir, I mean, again, I understand the issue of ecosystem, but again, I personally, I might be wrong, I'm a great believer of that principle, ما لا يدرك كله لا يترك جله. What you didn't get all, you don't leave all. It's not like the whole process to be 100% halal or rubbish. So the halal meat, of course, it is better if the whole supply chain is halal. But given this limitation and, I would go with that, and hopefully it will get better rather than to kill the industry. In the same token, I much prefer to buy personally halal food from Tesco and Waitrose and the local ones. So again, there's a lot to talk, but the eyes of the chair is piercing my neck here. I cannot. I have to go quickly.
No, it's all positive.
It's all positive. Back to Brother Wahid Qaisar. Brother Wahid Qaisar, it's true, but the Islamic Bank of Britain didn't survive in the form you have established it. Let's be fair. And at that time, because one of the things I read about it, which you know more than me, one of the weaknesses of Islamic Bank of Britain, it has 50,000 accounts less than £300. So instead of using it as an advantage for more wider participation, it has not. Brother Iqbal Sakrani, I'm delighted to see you. Sir Iqbal Sakrani, of course. Again, current accounts, they are not profitable even to Barclays. So the whole idea is now, this is why you have a commercial banking operation, and you have investment banking operation and merchant banking operation, so something will cover something. And that is where we have to be innovative. By the way, it's not a great innovation, but it's there. It requires people like, the shareholders, the stakeholders of the community to come together, involve real estate business with deposit, with current, with other things, and it will work. I'm sure, because there is demand, especially the tech business. Have I addressed all the issues?
I think you did very well. If you have just a very quick...
Very quick one.
Sorry, Dr. Amir.
I'm finished. That's absolutely fine. I just wanted to Brother Wahid, thank you very much. Yes, 2004, absolutely. Yeah, that's what we saw the first retail bank. But we had large number of accounts open, with very little money, and of course operational costs were there. But I really have to just emphasize on something, and looking from the CSR perspective, banks, but the Islamic Bank of Britain in particular, were making loss of between 13 and 20 million a year. It's a substantial amount. Despite the fact of the loss, they remained on the high street, Why? Because of one reason. I think it was just to cater for the needs of Muslim society. Of course, we have seen acquisition later on. I don't want to take too much time, but definitely we need, with support of the government, more financial engineering and innovation, so we can boost that.
Thank you.